If I put my rental property into an LLC, do I have to file both personal taxes and business taxes?
All right, so whenever we get this question, we got to ask, how is that LLC taxed? It can be a sole proprietorship. It can be a partnership. If we had another member, two or more members, could be an S Corp, could be a C Corp. And all those make a difference. If it's a sole proprietorship, then it's what we call disregard, which in the IRS terminology just means you forget it. You just ignore the thing. It doesn't exist. So it's all going to come onto your 1040, and then we would have just your 1040 tax return, but it's certainly going to have that activity on it. It's not like we can just avoid the activity. That will go on what we call Schedule E, page 1. If it's a partnership, well, then the partnership will file a return. And we're going to get a K1 from the partnership that will go on to our 1040. So we have 2 tax returns there. And then S Corp, likewise, but we wouldn't put rentals in an S Corp, so I really shouldn't go there, but but it would file its own return, give you a K1 as well, or a C Corp is a separate taxpayer, and it would file its own return. It would be unrelated to your 1040, but of course you'd still have to file your own 1040. But never, ever put appreciable real estate into your S or C corporations, with perhaps the one exception where we talk about maybe selling your primary residency to an S corporation. That would probably be the one except
If you're going to keep it, right?
Yeah.
We don't want to be in a situation where we have to refi out of an S Corp because it's taxable to remove it. We don't want, because if you pass away and you have a step up in basis, you're going to get a get out of jail free card. But you got to have a really good reason to own real estate inside of an S Corp.
Yep.
If you're a developer, like I just had this with a client, bought a very large building, kept it for 3 years, and now they're like, it's become so valuable as a hotel that they're going to demo it and then rebuild. And it's like they're going to sell that puppy. They already have somebody that they're interested in. They're like, hey, how do we not screw up our capital gains? It's like, okay, tear it down, sell it, let a new S Corp that you own do the development. And that way, at least we're getting our long-term capital gains. Over here, we don't have to worry about the recapture because they're destroying the building, right? They're retiring all the asset on it.
Yep.
So they're just selling land. But that's one of those things. And then we're going to run those numbers and make sure it makes sense. But it's a lot of fun. I mean, you laid it out really, really well. The only other thing I would say is that if you have that LLC, there is a reason we use an LLC in real estate. And put it on a schedule on page 2 of your Schedule E, and that's for financing. If you have income that's going on page 1 of your Schedule E, most mortgage companies are going to use 70% of that number. If it is going on page 2 of your Schedule E, they're going to use 100% of that number.
Yep.
So there are guidelines depending on if it's a federally backed mortgage. I think Freddie and Fannie do the 70. You want to make sure that you're cognizant of that. And then the other thing we see is if you are selling a property that's commercial in nature, or a large multifamily, make sure it's a partnership and does its own return, because you could screw up underwriting for a purchaser if you don't have that actual tax return. It messes them up. They don't want to be looking at page 1 of your Schedule E. They don't want to be looking at your personal return. They want to see a return on that investment and the books on that investment. And so just to throw that out there, that's why when you're meeting with us, and by the way, anybody can set up a consult here if they want to talk to one of our advisors or professionals. A lot of the times that's what we're looking at. We're trying to get as much information, because as you can tell, there's 3 or 4 answers depending on the facts on a lot of these things. And we're just trying to make sure that we get the gist of what's going on, so that we can make sure that we're helping you. In fact, yeah, it's free. So, and we're not going to twist your arm or anything, but if you want to have your answers or your questions answered and get an actual diagram done for you, it's my pleasure. It's our pleasure to help you. By the way, speaking of helping you, we have Jeff, Patty, Amanda, Jared, Dutch, Arash, Tanya, Ross, and Troy, all answering questions. They've answered over almost 150 questions now. If you have a question, go into the Q&A. You can feel free to ask it. I see so many questions going in there, and they are just knocking them out. So I just want to say thank you guys, because you don't get to act goofy online or in front of a camera. And they're just busting through questions, and they're probably like, why are they making me answer all these questions? No, it's actually kind of fun. It's like brain twisters. This is our, what is the one that where they're always asking you questions on TV?
I don't have TV like that, but I get to watch anything.
Come on, they have game shows where they're asking you, what is it?
Jeopardy, I know they have
There you
questions
go,
there
it's
in the form of a
Jeopardy.
question.
No, yeah, what is Jeopardy? If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.